Being one of the most powerful nations globally, you are bound to have an economy that you can rightly boast about. But when a tiny microscopic virus shows up, it ends up kicking your economy rights in its assets. The Chinese government put a warning out to the rest of the world, signaling that excessive economic stimulation in a few major countries around the world is getting out of control and could lead to not only an implosion of financial assets, but could also cause a catastrophic domino effect on countries who have kept a tighter rein on their fiscal spending in response to the pandemic. Just 3 months ago, Liang Tao, China's top banking regulator, said that recent interest rate hikes by emerging economies could lead to a bursting of global financial asset bubbles, which have been inflated to extremes due to quantitative easing measures taken by many developed countries. China is in effect blaming the US for not working together with other countries to coordinate financial regulations, causing some countries to raise rates, while other countries are lowering rates and printing money at warp speed, which could lead to financial chaos. Tao's concerns are also shared by many on Wall Street. Many former central bank officials, hedge fund managers, and retail investors believe that the runaway equity boom could potentially be followed by a crash resembling the dot-com bubble burst of 21 years ago. Many financial analysts believe that if the bubble were to burst, it could trigger inflows of a significant amount of capital into China. This might sound good for China, but here's the catch. The massive rush of funds into China would end up destabilizing the Chinese economy by rapidly inflating its currency, assets, and prices. So in essence, this event would create a chain reaction of inflation from the United States into China. If the market bubble tends to burst this way, the country may be ready to tighten its financial lending to control inflation. Xi Jinping, the Chinese president, admitted at an economic conference last year, saying the government needs to stabilize its real estate market. China officials have claimed that they have contained bubble risk in property finance and has managed risks from government debut, but China is notorious for not being truthful about its hidden financial practices, so we will have to wait and see if what they say is true.